This is our Forex blog for January 23rd, 2012. And like most days, we want to buy the strongest currencies versus the weakest and sell the weakest ones versus the strong. We compare each currency to every other one on multiple time frames using multiple different statistical tools we've come up with over the years. On the top, we have the dollar. Of this histogram, this is a real-time strength or weakness. There's 5 different statistical tools that make this up. 3 of them measure the direction that the dollar is going versus all the rest, the percentage of pairs the dollar is going up and down against, and 2 of them measure the statistical intensity based on the last 20 days average. What is extreme? Would be a blended level at and above the dotted white 80 level. So when you see this, underneath that we have the daily, weekly, monthly trend. If the real-time trend matches the daily and weekly, and I don't really care much about the monthly, but I will typically trade more lots when all 3 time frames line up. When you see a lot of weakness like this, followed by visually half the strength, typically that weakness will resume, especially if it had quite a bit of weakness at and above the 80 level, and especially if the longer term trend was down. And you can see it did here for about an hour. Then you had a little bit of strength, weakness returned, a little bit of strength, weakness returned for many hours. And you can see the same pattern here. You only need 10 pips a day to double your account every 2 months. So if you miss the first move, who cares? And if you see a pattern like this with almost no strength after extreme weakness and all the time frame trends are down, it's very likely to resume here coming up to 7:30. What was one of the stronger ones? The euro. Unfortunately, the Australian had a little bit of weakness, but that was also strong. So at 7:30, you could be looking to buy the euro dollar or the Australian dollar or the New Zealand dollar or the selling the dollar Swiss. Let's take a look at selling the dollar Swiss coming up to 7:30. Here's 7:30. You had a little bit of a pullback. You go short once it breaks down underneath this level at 86, and you can see it came all the way down to 55. And that's in a nutshell what we look to do. One thing that makes this not so good of a trade is when it's underneath the 2.0 weight containment band, typically most days you're going to get a reversal. Here's the Fibonacci profit target level that last night I predicted to be the maximum low of the day, and it was. So this is likely the max low, and you can look for counter trend trades once the weakness disappears. It's only gone up about 8 or 9 pips from there. Let's look at the euro dollar. 7:30, same thing. This one exploded up. Unfortunately, it's above the upper containment band. You have a little bit of a flag pattern right here. It goes up and goes sideways. Typically, that means the market's going to continue again. And normally, it's not going to go more than the Fibonacci profit target level when it's above the upper containment band. This is likely to be the maximum high, or at least the high for the next 5 to 10 hours. Let's look at the Australian dollar as well. 7:30, you had this little pullback. You would have bought it as soon as it started going up again from 50, went up 20 pips. Now, again, you preferably don't want to be buying above the upper containment band. Notice also my second Fibonacci profit target level was the high of the day in this one. This one was so strong it shot above my second fib target. This one found resistance at the second fib target. Second fib target was the maximum high. Look at the huge, almost 45, 50 pip drop from there. Fibonacci retracement levels, the market couldn't get above them. They're major selling areas, and then the market fell down. Dollar Swiss, like you saw, is the Fibonacci profit target was the low. This one hit my first Fibonacci profit target. It wasn't strong enough to go above it. That's what typically happens. So white containment bands, especially if there's a fib target right near it, usually is the end of the move. This one never, hold on a second, we're on the previous day here. This one went up to the Fibonacci retracement level. There was no profit target levels up there. And you can see today the Fibonacci profit target level got hit, and then the market went up one more time to the fib target of this last wave. Let's look at some of the other uses of the currency meter. This is the easiest way for most traders to find trades. And some of the best trends are the ones that just start out. You can see a lot of strength last night. The dollar had more strength and less weakness than the yen did. So, coming up to midnight, you would be wanting to buy the Australian versus a very weak yen. The Australian yen was a better buy coming up to midnight than the Australian dollar. It's more high probability. Here you can see the hourly moving average on the middle, When it breaks out right here, that's a good trade. You have a nice little pullback trade right here, and this is the previous week's high, it appears. That's a major resistance area. When the market goes up to there, usually there's some selling, but once it breaks out, you have these nice big trends. Notice this one shot through the first and second fib target, hit a monthly pivot level. You got to be really cautious above the upper containment band. One tool that I love, and I don't go over as much as I should, is the Chandelier stop, which is statistically based. When it moves too far, statistically based on the past average volatility for different times of the day, and when the momentum slows down, we tighten the stop. So this is a very good stop for getting you out of these big moves at the, what we consider the most opportune time. Plus, when the market's up too much and the volatility is really high, we have a very tight stop here, so you can use it as an entry method. You can see that trade there really pretty much broke even. You went long again right here, and you made another 15 pips. You went short right here, and it's already locked in 25 pips. So you can really use it as a trading system, especially in the direction of the longer term trend. If the daily, weekly, monthly trend's up, you buy here, you have a loss, you buy here, pretty much break even, buy here, 90, you're out at 17, you made 27 pips, buy here, break even, buy here at 17, you're out at 32, another profit, and you're short, and you made another 30 pips. So you can see it has a very high winning rate, especially when you trade it with the direction of the trend. And when the market's above the upper 2.0 containment band, you can use it as a counter trend method. It's going to have a very tight stop. It's not going to have much of a loss at all, 6 to 12 pips, sometimes 15 pips in the more volatile pairs, and that's it.